right. I hope you are doing amazing. Today, we are going to be doing a breakdown of the most precise entry model out there, in my personal opinion. The reason why I say it is the most precise is not necessarily because of only the efficacy of the model, the entry model in the execution, and then also the win rate and things of that nature, but more importantly, beyond that, I truly, truly believe the way to identify this entry model is extremely objectives. And I call it my Arcane breaker. You may have heard of ICT, unicorn breaker. So my identification for my breaker is extremely unique in itself, and it's extremely different than probably any other breaker that you guys will have encountered out there. So without any further delay, I'm going to go ahead and break down. So first, we're going to go over the foundation to even understand how to identify this entry model, because you guys will probably have seen, I think TT Trade on YouTube has done a video on unicorn breaker or unicorn entry model or some form of breaker model, but I really, really hope this breakdown or this explained video will help you understand how to catch proper unicorn breaker, because it is one of the most powerful entries that you can understand how to essentially utilize for your entries. But here's the thing, and I want to mention this before even going to the breakdown. When you trade, for example, inversion, which is one entry pattern that most ICT trader would typically utilize. Dodgy Trade utilized that heavily, and I think probably a few other major name out there utilized. PJ Trade utilized that as well. But the downside, I guess, say the cons of utilizing a unicorn breaker or breaker entry, I should say, is that it takes a lot more time for your entry to actually confirm. Therefore, your risk to reward is going to be slightly lesser compared to, like, let's say, an inversion model. This is the reason why breaker are not that appealing to a lot of trader, right? But if you want to have peace of mind of not getting consistently stopped out or building mental gymnastic around what an actual entry is supposed to look like, because a lot of the time people would have so many weird rules around the IFVG, because when the IFVG form, you need to have a lot of strong context around that to ensure that you're not making a mistake. Therefore, you get stopped out. And a lot of the time, if you made a mistake on the hard time from analysis, your inversion, you get stopped out. You keep entering and entering on the turtle soup or the continuous sweep of that liquidity. And then you're thinking that, oh, it's just maybe turtle soup with me, and then it's going to reverse my direction. When in reality, you are already wrong about the direction. This will be very unlikely to happen if you have a breaker entry. Let me put it like that. Okay. So if you can visualize that, if you already experienced that, that would be essentially like a pro and a con. Con, you have a slightly lower risk reward compared to an IVG. An IVG, you can easily get like a 2 or 3, or I would say on average, sometimes even higher. However, the con is that you can get stopped out much more often. So your win rate is actually going to take a hit, right? So you're going to be somewhere between either 40% all the way to 60%, but it's extremely hard to have a extremely high win rate depending on your trading system with an IBG model, unless you have a very, very robust, context analysis process on a high time frame prior to zooming in. The unicorn breaker, you ain't got to really worry about that. The entry pattern, because it takes so long to confirm, you don't really have to worry too much about, a lot of the time, if you're wrong, having to re-enter again, right? Because it takes so long. There's a lot of mechanics attached to that formation. So I just wanted to mention that as a pro and cons before I go into the video. So I do hope that makes sense. We're gonna take a quick water break right here. This is a lifesaver, man. Can't tell you how many times this saved me throughout the day when I'm about to drown. Well, not sure if I can say drown. When I'm about to go thirsty. So first thing we want to identify is market structure. Okay. You cannot define what is a unicorn breaker until you have identified swing highs and swing lows in your market structure. So for me, my structure identification is extremely objective. So if you identify a qualified swing high, right, your structure should have very obvious and objective qualified swing high, as well as obvious and objective qualified swing lows. So to identify swing highs, you first need a bullish expansion leg, right? So it will look essentially something like this, as you can see here. To be able to have an expansion, you need 2 or 3, right? 2 or more bullish candle heading in the same direction. Okay. you need two or more bullish candle heading in the same direction. In this image, the bullish candle are represented by blue candle, and then the bearish one are represented by white candles. So two or more bullish candle heading in the same direction are considered expansion leg, right? Or the expansion phase in my market structure identification. Therefore, right after that, what you're looking for is a bullish rejection. A bullish rejection objectively is a bullish candle plus a bearish candle. Okay, so that means that you're going to have an expansion first. Price is going to be moving in a bullish direction, right? In an upward direction. And then for you to be able to have a direction, you need at least two or more candles, right? You cannot have a direction without having at least two candles. If you only have one candle, it's just by itself. It's just a bullish candle. But the moment two or more come and join the hand together, then you have an expansion leg. An expansion leg is followed then by a rejection, which is objectively defined by having a bullish candle plus a bearish candle. Once you have this, what you want to do is mark out the highest point of this expansion, right? And then next up, you want to mark out only the low of the bearish candle. That's it. So once you mark this, this is what you're going to essentially wait for. You're going to wait for a bearish candle to close below this line, which I call the correction line, before you close above the highest line here above both of this candle, which is what we're going to be calling the expansion line. You want to see a bearish candle close first before you see another bullish candle close above. Now, if you see a bullish candle close here first, right, before we get a bearish candle to close here, you'd have to look for a new rejection again. If this mechanic does not unfold as I just broke it down, then you do not have a qualified swing high here. So the swing high will be confirmed when we have the correction right here, right? Once this candle closed below here, this goes from a rejection to a qualified swing high. Okay? So let's go again. I'm going to fluidly go through everything again so you understand how to identify a qualified swing high. You need two or more bullish candle heading in the same direction. Once you have that, you have an expansion leg. That's step number one. Okay? After step number one, you need to have a rejection. A rejection is a bullish candle followed by a bearish candle, right? Once you have this, you have your rejection. That's step number two. Okay? Marked out. Step number three, you need to mark out the top of that rejection. This will be the expansion line. You need to mark out the bottom only of the bearish candle in this rejection, right? This will be your correction line. In order for this to become a qualified swing high, a QSH, you need to have price close below this level, either with a wick of a bearish candle or body of a bearish candle below the correction line before we close above here with a bullish candle. If you have that, then this becomes a confirmed qualified swing high. And the same will be true for a bearish swing, right? A qualified swing low. So you need two or more bearish candle heading in the same direction, right? And then you're looking to mark out the low of that rejection, both meaning that the lowest point between both of these wicks, right? Here and here. So that means that if this bearish candle wicks is all the way up here, instead of this line being here, you actually mark it all the way here, right? If the bullish wicks is all the way down here, then you will mark the expansion line down here. Same thing here. If the bearish candle wicks was the highest one, it was up here, then you would mark the expansion line all the way up here, okay? Then you want to also mark out the high of the bullish candle. So in here, since we're looking at a potential qualified swing low, we want now the bullish candle to close above this correction line with either a bullish candle body or bullish candle wick, right? Either of those two things here, closure, confirmation before we close below the expansion line here with a bearish candle, will essentially confirm this swing low. I know it might be a little bit of mental gymnastic to understand this, but I'm telling you, you need to master this if you want to be able to trade identifying the arcane breaker. This is what I'm actually utilizing for my structure identification. I'm utilizing qualified swing high and qualified swing lows to be able to identify the structure to essentially confirm my breaker or essentially invalidate it as well. Okay? So qualified swing low, same thing. I just explained that to you. So we can go ahead straight into the unicorn breaker. So now, in order for you to identify an arcane breaker, or may like to call it a unicorn breaker, an arcane breaker would essentially be a qualified swing low. So let's say for bullish, this is for a bullish scenario. You want to identify a qualified swing low, right? That gets formed. That qualified swing low will be followed by a qualified swing high, right? Once you have a low and a high, so essentially you're in a bearish structure because this obviously also came from a high, right? This low right here came from a high, and then this high most likely came from a low, right? So this is essentially bearish structure, right? So first you need a low and then you need a high. Once you have that, you need this high right here to take out the last swing low right here, and then also with a fair value gap attached to that sweep, right? So you have a low, you have high, and then you have another lower low, but in between that lower low and then that lower high, that high here, you need to have a fair value gap that gets created. So essentially a bearish fair value gap. Okay? I'm going to repeat this again. That's the first step, right? You need to have, for a bullish unicorn breaker or bullish arcane breaker, some ICT traders like to call it a unicorn breaker, but I like to call it arcane breaker because many ICT, this is just a segue, quick segue. Many ICT traders don't require the gap to be on this leg, and that's something that I heavily required. So you need to have this swing, swing low, swing high, and then after this swing high, you need to have another lower low, but that lower low uniquely need to take out this previous swing low, obviously, and then also need to have a fair value gap attached to that leg, right? So in between swing highs and lows, you're gonna have legs, right? Either a legs of expansion or leg of correction. So in a bearish structure like this, when we're expanding and creating a new low, that's a leg of expansion. If you are retracing to create a swing high, that's a leg of correction. So the leg of expansion here needs to have a fair value gap attached to that, right? So that's step number one and step number two. What is step number three? Step number three, once we have this, all you need now is for this high, for this low right here, to take out this previous high, right, with bodies. So we created essentially a new higher high here that takes over this, that bridge back above this high and close above with the body. Now, if you close with a wick, guess what? It's all like something like this. Guess what? It's not a valid breaker. You still need to get that full closure above. Some trader likes to sometimes put the line of confirmation at the body. I don't do that. I do not. It's the highest point in this swing. So if the highest wick is all the way up here, then this will be where the unicorn breaker will need to be confirmed, right? So you need to make sure that you actually get that closure above that swing. Once you do that, then that breaker, you have an arcane breaker on your hand. Now, the reason why this is extremely powerful as a pattern to follow these steps and mechanic is because you're going to obviously going to have your unicorn breaker right here with this candle. This order block going to turn into a breaker block. But on top of that, you are also going to have an inversion gap that's essentially going to be formed, right? Price is essentially creating two PDA rather than just one, right? Instead of turning your order block into a breaker, it's not only just doing that, it's actually also turning your fair value gap nested within that breaker into an inversion. So you have two PDA array, right? Nested right there. And then the final third PDA array that I sometimes don't mention a lot is this final order block all the way down here, right? This is the order block that initiate the expansion to the buy side, right? You have the inversion right here, and then you have the breaker block. So you got three PD array all together there, right? So it makes it extremely powerful. When you have three PD array on the reversal pattern, it makes your entry model extremely powerful. You'll have extremely low chance of price just confirming this and then just simply just sweeping to all this. However, if you just have an inversion, a lot of the time, price can barely stop you out and still move in your direction. You don't really see that with a unicorn breaker. At least not as often, right? As often as you will see with an inversion entry. And this is not a diss on inversion, by the way. This is just, you're going to have a lot more entry, right? For inversion than a unicorn breaker. So naturally, you're going to find probably much more loss compared to, let's say, a unicorn breaker system. And you can find tremendous amount of profitability with that, right? But I just want to explain to you the psychological impact of that it has on your mind. if you're trading with a system where you're finding consistent win, it's forcing you to be patient, right? Wait for everything to align before getting into the market. You'll find yourself having more conviction into the move that you are getting into the market. You'll find yourself tilting less. You'll find yourself waiting and being more patient than usual. Okay. So last but not least, this is just going to be the bearish unicorn breaker. We went over the bullish unicorn breaker. So the bearish is simply the exact same thing, but just reverse, right? So you're looking for a qualified swing high followed by a qualified swing low. Then you want that qualified swing low to take out this qualified swing high, right? Create a higher high in this scenario and also create a fair value gap on the new expansion leg that took out this previous high. Those are the first two steps. Low and high, step number one. And then low, take out previous high and create a fair value gap on expansion leg, step number two. And then final step, this higher high that we just created need to take out the original low right here and then close with body past the lowest point or the expansion line, right? Above this rejection. Because these two candles right here represent what? A rejection, right? So you just need a closure above the rejection. What's the line that's on top of the rejection usually? An expansion line, right? So you need the expansion line here to be broken past with bodies. If you do get that, you will have in my book what I call an arcane breaker, right? So this was my, I guess, redefined unicorn breaker. It's simply to get people to think, get trader to see that if you want to find consistency with your entries and not see yourself getting turtle soup consistently, you need to find the inversion on the leg that took the last liquidity before the reversal, not the actual reversal leg, but the manipulation leg here. So this expansion leg essentially becomes the manipulation leg in the formation of the breaker, the arcane breaker. And then this leg is essentially what I consider the reversal leg. This is a leg that essentially confirms the breaker, but is part of the reversal initiative for taking price higher, essentially shifting direction of the market from this point and shifting the order flow. So I hope that made sense. So next up, we're going to go on the chart. I'm going to show you an example of what it looks like. And also the indicator that I have built with our team took us a lot of month and time to actually codify this into an indicator. I'm going to show you how it's essentially plotting this on a chart to make it easy for you to be able to identify this. All right, we are on the chart right now. And I want you to take a look at the chart that you see right now. We have our arcane indicator on the chart, and then the arcane indicator essentially mark out the arcane swing highs and arcane swing lows as defined in the previous breakdown. So we have spent a lot of time codifying this so that it's able to essentially mark it on the chart so you don't actually have to do it manually. This does it all automatically. So very soon we're going to be releasing this. And when we do release it, I'm going to include the link in the description if you want to take advantage of this. That link will show you exactly how to do that. That's for you to essentially do your research on that. But this is not for this video. I want to talk about obviously identifying the unicorn breaker here. Where do we get the shift in direction? Where can you see the shift in direction here with price? You can clearly see, right? We shift direction from here. We bearish all the way up until here, and then we suddenly shift direction here. Okay. So let's go ahead and identify where did the shift happen, and then do we actually have a unicorn breaker on our hand? So we're going to go ahead and identify the swing high and then identify the bullish breaker in this reversal here. So here's the qualified swing high that we have here. Here's the next qualified swing low. This is a swing high. As you guys can see, the indicator mark it out. This is a swing low and this is a swing high. So before we get this shift right here, right, do we have a fair value gap in between this high and then this high right here? I will give you a few seconds to confirm if we do have one. Do we have one? 3, 2, 1. Yes, we do. Let's go ahead and mark out that fair value gap. So this is a fair value gap right here, right? This is a fair value gap that's there. And originally is what? A bearish fair value gap, a bearish gap, right? So once that gap gets formed, right, it gets inverted here. And then the top of this swing right here will be our expansion line, right? With our expansion line, And then we have our arcane breaker right there. Boom. So that means that this is where you get the reversal. However, here's the thing. A lot of trader can sometimes see this right here as a swing if you don't have this on your chart or if you don't understand how to identify swing highs and swing lows. Therefore, if this get close, you get a closure above this swing, and let's say if this was not as close as it is right now, you could sometimes get trapped where you jump into a trade too early and then you actually don't have an actual breaker behind your entry and confirmation. When it's another leg that have fair value gap attached to it, this leg right here of expansion, I believe, let's see if we have another fair value gap here. I believe we got a tiny gap, right? A very, very tiny gap right here. I'm not sure if you guys can see. We get a tiny gap right here. For me, it does not really matter. As long as we have a gap, that's really what matters to me. And then since we close back above this, then it turns this fair value gap, bearish fair value gap into inversions, right? Inversions right there. So boom. So that gap as well, that also created another breaker right here. So if you want to mark out this one, you can also mark out this as a unicorn breaker right there. Boom. Okay. And then you get the closure right here. Boom. That's another unicorn breaker. And you can do this on your own chart. You can practice identifying these, right? This leg right here, obviously, you can say, let's say, for example, even if you didn't have this fair value gap right here, it wouldn't really matter because obviously this leg does not have a fair value gap. Let's say if it does not have a fair value gap, but the following leg do have one. So from this swing high to this leg to this reversal point right here, when we do reverse all the way up here, we at least have a fair value gap in the sequence of that sweep of liquidity, right? So the sweep of liquidity for this point right here, which is the swing low, this is a swing low that created a swing high. We do get the sweep on this leg right here, on this very last leg, with a fair value gap attached to that. So from this high to this low right here, you do have a gap attached here. Even if we did not have this one right, it would be fine because we still have a gap attached to this final leg. So we get the reversal and then the confirmation. This is where the confirmation will be. So if you're looking to enter this, your long entry would have been either here if you're looking to enter with this one, right? You can place your stop loss typically behind the body of the last body, right? And to be safe, usually the swing. And for my arcane model, I usually give myself a 10-point buffer. So since it's at 455, I'll usually put at 440, 444, 446, 445. There we go, somewhere like this. So I'll calculate the risk maybe like right here at the swing, and then I'll add a little bit of a buffer afterward. But if you don't want to think too much, just place it at the swing. It should be more than enough, right? For you. And you can target some level of liquidity up here. As you can see here, this could be the target. You can have a target here, or you can target also a major psychological level or high probability objective or some type of draw, right? Whatever system that you're utilizing. But you could have seen right here how this, after taking out liquidity or maybe tagging into our internal range liquidity, this would have been an amazing reversal. And then you would have seen an additional potential accumulation potential here. And then placing your stop loss behind maybe the inversion at this point that's created here. And then still targeting maybe this level of liquidity right here, adding maybe a one-to-one RR on this position, give or take. This would take a little while to confirm rather than the inversion. But if you're trading the inversion system, like I said, it will be much faster, right, to get in. But guess what? You could also potentially get stirred or soaked, right? Because for price to just keep sweeping before reversing is extremely easy. But for this unicorn breaker pattern to get reversed, it's extremely hard once it gets confirmed, which is the reason why I enjoy trading unicorn breaker or arcane breaker, as I like to call it. With that said, that is really all for me. I hope this was insightful. If you have any question, please let me know in the comment section down below. Very soon, we're going to be releasing the suite of our Arcane Concept Indicator. So this will essentially include how to mark out qualify swing high, qualify swing low. It will do all of this for you. It will highlight Unicorn Breaker or Arcane Breaker, as I like to call it. I called Unicorn Breaker for so long. Even when I started to call it Arcane Breaker, it just does not roll off the tongue as easily. I mean, I love ICT concept. I enjoyed learning and have so many of the concepts that I have taken from the library and building it around the data that I have collected. But yeah, that's always something I like to say. But the indicator would include arcane breakers. It would include 15-minute fair value gap that I essentially validated and invalidated, because that's essentially what I utilize for my internal range liquidity. It would include potential target, and it would include a bunch of other set of concepts that I put together, volume gap, volume inversion gap, and stuff like that, or volume candles, like really, really powerful concept. So with that said, that is all for today. Please, if you have any suggestion for future video or any sort of explanation breakdown, let me know in the comment section down below. I'll be happy to hear and make video down the line in regards to your request. With that said, until next time, stay in profit and peace.